It's the mortgage rate crystal ball edition. Where are mortgage rates going to go in 2020? So in thinking about this video and also where are mortgage rates going, I was struck by a phrase that kept on circulating in my head, and it was transparency equals volatility. So 2019 was an incredibly volatile year for financial markets. In terms of mortgages, I could see rates change by as much of 1/4 to 0.5% overnight. Yeah, overnight. It is nothing I've ever seen before. Traditionally, we would see mortgage rates react to Fed announcements, economic data, but we have a new player that really stole the show this year, and that is Twitter. Yes, Twitter. Twitter is affecting financial markets. To say that it's not would be to be blind. You cannot look at what's going on in today's society and not recognize the impact that Twitter is having on financial markets. So what am I talking about? I am talking about President Trump's tweets. Yes, yes. Now, here's the thing. He is incredibly transparent. He has brought us into the boardroom for the China trade deal agreement. We have been there, play by play. Every time he's having a good day, it's a good day. It's going to be a great agreement. You know, this is going to be a win for America. The market reacts. 3 days later, you may get a tweet that's like, this is the worst. It's not going to work. Tariffs start tomorrow. Whoa. Okay. So in the past, what would we have seen? 7 years, you know, let's say that their trade deal was being negotiated. You would have seen a president, the people meeting, they would have been shaking hands. There'd be a picture about what they're trying to accomplish. And then once it was done, there would be a picture, once again, shaking hands, saying what the results of the agreement were. Okay. So during that, the financial markets were not reacting to the trade agreement because they didn't know anything about what was happening behind closed doors. 2019 is different. 2019, we have a president who uses Twitter as his direct communication to the American people, and he is a big believer in sharing, telling what's going on, being transparent. And because of this, the financial markets react to it. How could they not? They have to. If the president of the United States is saying that a trade agreement is going well, that affects our economy. If it's going poorly, it affects our economy. They need to react. And that is what we've been in 2019. We've been in an incredibly reactive market because regardless of the Fed, regardless of the economic data, what our president says has weight. And that is what we're going to continue to see in 2020. You know, as long as we have politicians who are being transparent and are sharing the play-by-play, blow-by-blow on everything they're doing, the financial markets will react. And that is where I see 2020 being, once again, an incredibly volatile year for mortgage rates. How could it not be? There's too much going on for it to be stable. It's not like all of a sudden the financial markets are going to be like, oh, we don't care what the president says. You can't say that. He's the president of the United States. He's running our country. Of course you have to care what he says. So, and then you're like, well, what if he didn't get elected again? Or what if he got impeached, right? Then would it change? I don't know. I mean, that's the thing. We have a whole new crop of politicians that are using Twitter and social media to air their every feeling, thought, movement about what's going on in the area they serve or trade deals or anything else. We saw in New York a huge job opportunity go to the wayside because of comments on social media by politicians about the deal before the deal was even etched out. That's the world we're moving into. As we start this new decade, we are in a world where social media, politics, and financial markets are merging. So all you can do is expect the volatility. In terms of mortgages, if a mortgage lender quotes you a rate that you like, lock it. Because regardless of the economic data, regardless of what the Fed says, we don't know what our president is going to tweet tomorrow. So if you like the rate, lock it. And if you don't like the rate, well, odds are you might end up with a lower one. It's hard to say. So you want to make sure that you're speaking with a mortgage lender who's knowledgeable about the market, who's watching the highs and the lows, who's paying attention to all of it, not just the data, not just the Fed. Yeah, tweets are on the list now, guys. That's what you want to make sure, because you want to make sure that you can take advantage of the volatility, not be a victim of it. So I hope this was helpful. If you have any feelings about Twitter and politics and financial markets, feel free to weigh in. I do want to say, something that's important to note is that right now, all of this is being considered as transparency. But whether or not it's actual or perceived transparency is something we won't know for years to come. And that's something that historians